TGIF, everybody. Hi, Scott, Brock. Everyone doing all right? Good. Hope you got some sleep, bro. Hi, Kevin, Didier, Ren, Brock. How are you, my trading warrior brother? Everyone doing okay? Everyone have a decent week? Raj. So, oh, thank you, Paul. Yeah, actually, anyone that's been listening to Face should not have been surprised by the dollar rally. We've been talking about it for at least all of this week, and since a big reversal that we had last week in Aussie and the dollar at the 78.6 level right here. So it's been a very nice rally from here. Broke the downtrend. 92 is a big number. There are going to be corrections. I think they're going to be pretty shallow in the dollar until we complete to the upside. And this was something that went right to my number. I mean, I've had this red number here for months and been talking 687. Look at that, right? So traded it there. I came out a half and BE stops now into the NFP. Canada's performing well. It looks like we have a breakout here as well in Canada. Should hold 680 on any breaks. And we were talking about the RSI in the 10-year yields yesterday, right? That we had this confirmed high and that markets rarely peak when momentum confirms price, and voila. So you could say we have a divergence, maybe this is drive 2, but it's well over 70. It's not ideal. And then the S&Ps looks like they're going to try and arrest this decline. They took out this support level, took out 2 major support levels. So we need for the market to close here. Maybe we get a weak number and the dollar comes off. Hello, Sinatra. Okay, but for the week, we're still lower on the week, I think by 30 handles. And, this is going to be an important area for it to close above to arrest the decline. I certainly don't think this is the low and we're going to blow to new highs. In fact, just this move from here to here is going to take it back down towards the 35 and a half level or so. So here's your daily on the S&Ps. Looks like they're going to try and bring it back, but here's a weekly. Pretty ugly week. I mean, it's 3 red candles in a row. Okay, so, confidence is building. This is a high. And the dollar is part of it. And I think the dollar is going to make a move up to here or here. And basically, that's it. And you know what? So if you were in Face, you had some good ideas of things to short. We talked about Aussie not getting back to the level everyone wanted to short it at, right? This wasn't much of a rally, right? Everyone wanted to sell it at 79 or better. And gold, it's just a trade for me right now. It is a kind of a 3 drive formation here and diverging. So I don't think this is the bottom, but it could be a bottom. Anyway, everything just starts off with a trade, as a trade, as a scalp, and then you always keep a piece on when the scalp is working, and then it could turn into a position. But anyway, that's what happened. I mean, I had this number here for quite some time, Didier, and look at what happened when it tagged it. So it was 2.618 of something. All right, so stick around. We have Charlie Gasparino here. He's going to talk about the importance of short selling. And I'm not sure what Powell really said yesterday, but obviously the market didn't like it. So I guess he's saying it's normal. He's not worried about this backup in yields. And hope everyone had a good week. So you shouldn't have been surprised by dollar strength, and maybe made some money on the long side of the dollar, short side of S&Ps. And if you're a member, maybe you have some of these green pattern and plays working for you here. All right. Canada, Euro, Aussie. Okay. Some pattern and plays if you're a member. All green. Maybe you have at least one green trade working for you into the NFP today. So I'm going to bring Blake in now and see what his preps are prior to the number. Good morning.
Good morning, Dale. TGIF, by the way.
Yeah, really.
Yeah,
Thank you.
I'm ready too. You were saying you were talking about Powell, and I'm just going to say that regarding the Fed chairman, he wasn't concerned with yields, and the market was really hoping, and this is why I think equities came down, is he was really hoping that, or the market was hoping, excuse me, that he was going to discuss a little bit about the rise in yields, and maybe that's a little exaggerated, or just sound a little concerned. He wasn't, and so the market didn't like that. The market didn't like that he wasn't concerned, and he would continue to let inflation run higher, and it's fine. So basically, when you see the yields in the 10-year, and across the curve as well, but the 10-year and specifically, when we're busting a move above 150 yesterday, we broke this is here, let's go over to the 4-hour chart. You can see when we punched through, this is after his speech, we punched through 150, and now you can, and I'm just gonna, this is a 10-year yield, guys, just so you guys know where I'm at right now. This is a little cup and handle pattern developing, by the way. So the problem is yields started to rally, and when yields rallied, stocks actually started to sell off. So what does that mean for today? Well, what that means for today is the non-farm payroll numbers will matter. How about if we get a strong jobs number today?
Yeah, good point.
Well, yeah, because if we get a strong jobs number, people are going to say, oh, the economy is good. And it really doesn't even have to be we don't have to create 300,000 jobs, Dale, or 500,000 jobs. If we're in line or close to in line, the market's looking for about 200,000 jobs, roughly. If we create 150,000 jobs, if we create 250,000 jobs, I don't think that matters as much as we are creating jobs, and watch average hourly earnings. I think they're supposed to come in line. Let's see here. Here's Data Flash. You can look at investing.com too, and see what they're looking at. So I'll just leave it right. Oops. Am I on Friday? Yeah, I am. Okay, just making sure. Yeah. So average hourly earnings at 5.4% year over year, month over month 0.2%. So that should stay in line. Yeah, that's what Data Flash has as well. So if average hourly earnings are in line or maybe even higher. Okay, so we see that inflation's ticking up, and then unemployment rate, maybe is at 6.3%, or maybe even ticks down. So don't just focus on the headline number. As long as the numbers are good, relatively good, yields are probably going to press higher. And if yields press higher, stocks don't like it. If stocks don't like it, the dollar continues to press higher. And that's why, I did tweet this chart this morning with the dollar index. Let's go over to the dollar, and we're trying to break out. This is an inverted head and shoulder pattern. Okay. If you guys like say, oh, I don't like head and shoulder patterns and they're like that, that's fine. Whatever you want, however you want to look at it, it doesn't really matter to me. To me, it just, we're trying to break out here. And this is a really key breakout because this is the previous September lows. And we have made, as you guys all know, we've made higher lows in the dollar index the last couple of weeks. And so that's important. So now what I look at is the low to high. We're at the 127% extension. 161% extension will take you to 92.83. I'm just giving you guys a real quick technical, technical view of the dollar. This
Very
is
nice.
where it's going on a spike up today. And then I'm going to leave you with something else before I go. 161% extension of the dollar index, right? Of this last leg lower. This is when everybody thought the dollar index was heading to, hell in a handbasket. So now we're rallying, but take a look at this daily trend line. Okay. So this is, I had to zoom all the way out on the dollar. You guys follow me thus far, right? I'm not losing anybody here. Just making sure.
Got me.
Okay. Lows from 2011.
Yeah.
Lows from 2014. Low from August of last year. This is, obviously post-COVID lockdown, right? So that takes us back towards, let's just say roughly 93. So I'm just going to say this from the 92.80 level till 93. Let me redraw this. This is where it matters. So if you're a dollar bear, that is what has to hold. It has to hold. And if it doesn't, the dollar is going a lot higher because, this is the 200-day moving average. I hope you guys can see that. This big red line that's okay. 200-day moving average, 161% extension, underside of this trend line. That's like a triple confluence of resistance for the dollar. And if that breaks,
95, 96.
Yeah, we're going to be trading. I was actually thinking 94.50, maybe even 95, 96. Yeah, I mean, it's all possible. And if you're short the dollar, you got to be very keenly aware that where that puts the euro dollar, 116 ish.
Yeah.
I was talking to one of the guys that I used to trade with. I was just talking to him yesterday, and he's like, he's short the euro yesterday. And I'm like, yeah, I mean, it looks like we can see 115, 116. And and remember, let's forget all this stuff that I'm telling you right now. If there's one thing that you should know is what? That the market is extremely short dollars. Remember, it came off a little bit last week, but via CFTC data, which can be a little deceiving because you're not seeing everything there, but it's the highest level of US dollar shorts roughly in the last year. So I could imagine a squeeze. It doesn't mean the dollar is going back to 100, but could the euro slump to 115? Oh,
yes.
Sure. Yeah, absolutely. And it just on a position, squeezing everybody out. But then you get the 10-year, screaming higher. Now, before you get too excited about the dollar, and let me, I'm going to stop here. And actually, you know what? I'm going to stop. I'm going to take us over to the 10-year. I am at the 10-year. Okay. So there, I was going to take us to the yield. There's the yield, but let's go back over to the 10-year ZN bond market. Okay. I do think we're going to bounce pretty soon. Dale, did you see the DSI yesterday? Go ahead.
On the bonds?
Yeah.
Was it 9?
9.
Yeah.
9.
Yeah.
9. That's
999.
9.
That's three threes.
It's pretty extreme. So I would think that the dollar, the bond market, we're so, it's such a bearish extreme right now that, and remember, we can register single digits for a couple of days, So what I guess what I'm trying to say is, let's say jobs market, jobs report's good. Um, and the stock market, starts to think, oh, good jobs report. Stock market starts to go up, yields go up, stock market then reverses and starts going down. Yields continue higher today, and the bond market slides towards, let's just say, this is the, shoot, I grabbed the wrong thing. Hold on, let me delete that. I'll actually redraw that later. But you can see the fib extension of the post pandemic lockdown move comes in at 131 on the 10-year, 131.21 roughly, and that's below the breakout point. So we might slump a little bit further in bonds, but I would be very, very careful about selling bonds down here. Not necessarily today. Today you might get the move, and bonds overextend themselves. But I do expect that we're going to get a pullback in yields and a bounce in the bond market, even if it's just minor. I mean, you guys trading bonds right now, you might be thinking, oh, Blake, you're crazy. Bonds are going so much lower. I don't disagree with you. I wouldn't be surprised if we do this. Right? So bond market hits one more new low today or tomorrow. Yields continue higher towards, 160 in the 10-year, 170, 180. And then we get a consolidation and we have to work off those oversold conditions. And then we continue lower in the bond market and yields, go up to 2. And then we start to get a taper tantrum, or, the market starts to, think that the Fed's going to step in, whatever, I'm just making up stuff as we go along. But that's just me like imagining right now. So I'm not bullish the bond market. I just think that you've got to be a little careful here because the sentiment is very extreme and we've gone pretty far. So just think about that as we go into today. So I want to pass it over to my colleagues. I don't want to do all the speaking today because I know that we have a great interview. I actually really enjoyed, I've been listening to Charlie Gasparino for 25 years or however long he was on CNBC, probably, well, I think he was on longer than that, but I just remember listening to him pretty much my entire career of trading. And it's interesting to listen to him. I guess it's not like he's not working, but he's not working. Right, Dale? I mean, it's interesting to hear him and his more of his personality, get to hear more of his personality and then, get some of his points of view versus being a journalist. You gotta, I guess from, as a journalist, you got to report the news, not so much your opinion. I know he does, because of his seniority, probably has a little bit more flexibility in offering opinions and analysis on what's happening. But it's neat to listen to more of the backstories behind the stories.
Well, I mean, his sources are unbelievable, right?
Yeah.
I mean, I talk about intelligence gathering. Can you imagine the people that Charlie knows after all these years in New York?
Oh my gosh. Yeah. It's gotta be really, really cool. So anyway, it's exciting I actually really enjoyed listening to his interview the last time you had him on. So make sure you guys are around. Forex Gal asked, am I going to be around for non-farm payroll? Yeah, I'm going to be in the chat room. That's where I'm going to be. I'll be in the Forex Analytics chat room. If you guys want to know how to get there, when you're logged into Forex Analytics, it's this little button right here. It gets you into the chat room, and you can see this is all the chatting that we've been doing since I got up this morning, and that which was only less than 2 hours ago. So you can see it's been a lot of chatting going on. Okay. So that's where I'm going to be. I'll be there with the Forex Analytics traders. Remember, if you guys want to figure out how to get Forex Analytics for free for like 4 months, up to 4 months, go to the Forex Analytics sponsored page. Okay. Pepperstone Securities, one of the largest FX brokers in the world. They are our partner. So you just open, if you're outside the US and Canada, use this link right here to open a Pepperstone account. And then also, if you're in the United States or Canada, click this little link down here. It says email us or live chat on Skype. If you're in the United States or Canada, this way you'll be connected to Forest Park FX. They'll help you out with finding a good broker that fits your needs. So guys, thank you for being here with me. Stelios, Steve, good morning, gentlemen. And obviously Dale, I'm going to say goodbye and good morning at the same time.
Good morning, good evening, and good
morning.
night.
Hey guys. So we got a big day today. We got
Happy New
non-farm
Year.
and Stelios, you've been in the chat room, and what have you been saying in the chat room?
Well, I said that this is the first payrolls number in months that's actually going to be important and may move the market. So we'll probably move the markets.
Yeah, it's the first time I've given two craps about non-farm payroll in probably a year, right? Because it's all been about stimulus and the Fed and monetary, but now we're getting past that, and as we're coming into 2021, this last year, around the new year, I'm like, look, 2021 is going to be all about data mattering, and this is where data starts to matter, right?
Yeah, exactly.
Yeah. All right. Well, hey, I'm going to pass it over to you guys. Thanks everybody for listening in to me, but don't go anywhere. A lot coming on with Stelios, Steve, Dale, and Charlie Gasparino. So see you
Thank
guys.
you, Blake.
Thanks.
Thank you, mate.
Okay. So shall I take the screen? Do you want to do it? Actually, I have a couple of things. Oh, you got it. Okay.
Go ahead, Silvio. Grab it.
No. Okay. Continue. Desktop 1. Okay. So yields are the important thing here, in my opinion. And look, we seem to be breaking higher above this this zone. The thing to remember, I think, is that, look, for the last 10 years, we've been oscillating between 1.5% and 3% roughly in 10 years. So all we're doing now is we're reversing this post-COVID move, which took us down to 40, 50 basis points, and probably going back into this channel-ish, whatever you want to call it. The question now is, what does that mean? And I personally think two things. One, this incredible rally in risk assets post-COVID, even though we're going back to some kind of normality, but we're not even close yet. So these rising yields, if we manage to stick above and we stay within this channel, so basically we go to 2%, maybe even 2.5%, whatever, that's going to just put some pressure on risk assets and equities. And it's going to give some strength to the dollar, which kind of makes sense. And it's not the end of the world if that happens, right? A correction in equities or in the dollar should be healthy, and it should be necessary, I would even say. So the big picture for people panicking about yields is that, look, we were in this range for years and years, and obviously COVID brought us a lot lower, but now all we're doing is we're going back to what used to be normality. So, Chairman Powell yesterday, he didn't show that he's worried about rising yields. And maybe this is one of the reasons that, look, we're going back to where we were pre-COVID. And it kind of makes sense. Obviously, the markets did not expect that or did not like that. So that's why we're getting equity markets a little bit nervous. We're still not going anywhere, right? We're still at 37.80 in the S&P. So, it's not the end of the world, but I think a rally in yields from here further towards 2 or 2.5% will bring a correction, and I think it should do as well. And the dollar, I've been showing this for a while now. This is what I think will happen to the dollar. I'm still bearish the dollar for many reasons, fundamental reasons in the medium term, but in the short term, everybody's the same way. Everybody's short bonds, everybody's short the dollar, and I think a correction is definitely due. And we know how these things can work. We know how violent they can be when they start going. So I do think, just like Blake said 95, I think we might even get to 96 or something, somewhere there in the DXY. It's not unrealistic. And, remember, we're trading 89, a couple of weeks ago or 10 days ago, and now we're 92. So, things can move. And I think if the dollar does get to around 96 on the DXY, that's going to be a nice place to start looking for dollar shorts, in my opinion.
I agree. Nice look.
Yeah, and then metals. I mean, again, we've been talking about metals for a while. Gold is kind of breaking, not 100% yet, but I think 1680 is the level somewhere there. And if we break that, then we're going towards possibly even mid 1500s. If we do get there, I think again that's going to be a gift. Same with silver, we're breaking the trend line, and I think if we get anywhere near 24s and 22s are my levels to start adding, because I do have a small long from 26ish, let's say. But these require patience, you know. It's not unless you're scalping, obviously.
Everything requires patience.
Yes, it does. Yeah.
I hear myself talk. That's a part of my self-talk. When I'm ready to pull the trigger, I go, be patient, Dale. Be patient.
Yep.
I have to say that to myself.
Yes,
Because
absolutely.
otherwise you do impulse trades, things you didn't plan.
Absolutely. And oil as well still keeps going. There was surprise, the OPEC surprise, they're not really going to be increasing production, at least not just yet. So, we keep going. And this has been a very, very impulsive move here. We're getting to a level where I think we should see some kind of reaction coming now. Anyway, that's what I wanted to say. Obviously, we have payrolls today, and see what that number brings. Steve, do you have anything you wanted to show? We have about 4 minutes.
Yes.
Good.
So crude oil is back. Since you mentioned it last, it's back in the channel's resistance. Also, at the same time, that's the previous high, right? That's the January 2020 high. So we, in essence, we made a rounded trip, right? So key level of resistance, key confluence of resistances. Yeah, I would definitely not be buying up here, especially if indices remain under pressure, which I think it's a likely scenario because the S&P has broken down from the wedge, the Nasdaq has broken down from the wedge. So, they seem to be vulnerable. I mean, so far today, pre-market, we've had a little bit of a rally, but I think that now they're vulnerable. As the dollar, we said, I don't remember if I said it during phase or at the second part of phase. Later on, I said that, listen, I don't know, I have no idea what Powell is going to say, obviously. But first of all, I think that there is a good chance he can disappoint by not saying actually something. And second of all, there is the technical picture tells me that the dollar is probably about to have at least another leg higher. So Powell disappointed by not feeding the machine, because in essence, expectations now are like a machine that never stops being hungry. I mean, you need to keep feeding them more and more, as the RBA did Sunday night, Monday morning. What was it? So they were hoping that Powell is going to say that they're going to do something about yields. They were hoping that perhaps we could even have some type of a surprise having to do with the quantitative easing or whatever. They got nothing, and that was enough to in essence help the previous turn lower resume. And I think that before we get some type of intervention, we might need somewhat more to go. Aussie is about to break lower from previous trend line support as well. I think that's important. The Kiwi has already produced a lower low. That's important. After producing a higher high out of a triangle, we said back then that triangles are usually terminal formations. So I think there is a very good chance that all these moves need to unfold further, because we've had strong lasting trends, and a correction at the very least should be worth somewhat more, having to do with both price and time. So I think you should be careful in trying to fade these moves like immediately. Probably not such a good idea.
Steve, we have payrolls in
yeah,
5 seconds,
know.
and then we can
5
bring on
seconds.
Charlie Gasparino.
Yeah, there we go.
Let's have a look at the headline number.
Let's see. US trade balance. Let's get a new record. Yeah, we got it.
68.2, yeah.
Yeah, there it is.
Oh, 379. 379. Wow.
And slight reduction in employment. Average weekly hours reduced. Manufacturing payrolls increased. Canadian trade balance more or less as expected. Factory orders. Previous ones revised as well at 166
Yeah,
versus.
that's strong.
Yeah.
Private non-farm payrolls also. Yeah, everything's strong. So let's see what the market makes of that. Okay, let's bring Charlie.
Dollar seems to be at the highs of the day. So initial reaction for the dollar seems to be higher. Okay.
All right.
We'll have a lot more to talk about in 45 minutes.
Yes.
Okay, you still have a
Steve.
few minutes if you want. I don't see Charlie in here yet.
Oh.
Okay then. So let's see what the metals are doing then.
Steve having time to talk. Oh dear.
Yeah. Well,
Look
you
at
know,
gold.
he was quiet for a whole week, so he's got.
I almost became quiet for eternity. So.
Oh, I don't believe that could ever happen.
And look at yields. 10 years, 161 now. So metals are going lower, dollar higher. Yeah, it kind of makes sense.
Yeah, yields pushing 160 as you said, Stelio.
And Blake said it. Blake said it. What if we get a strong number? He said, you know, bonds are going to keep going. The dollar.
Look at the 30. Look at the 30-year yield. Testing important channel resistance here as we speak. Yeah. Okay. That's very, 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 very nice. I hope this corrective move lasts a little bit longer. I think the market's thinking is 100% flawed, and I really love this. I don't have any stakes against it. I just want to, get amazing opportunities to sell the dollar. So, the bigger the mirage, the bigger the market's foolishness in believing that actually the Fed is going to end up raising rates earlier, that things are going to normalize earlier and all that, the bigger the mispricing and the better the ability we'll have to buy metals at much more attractive prices, buy some of the commodity currencies at much better prices, which they hadn't given us an opportunity to do so in a long time. I mean, I really wanted to, other than the NOK, I really wanted to get some exposure in the Oz and the Kiwi, but I never got the chance because they never actually pulled back. So, I'm really, really hoping that, the market is going to keep thinking what it's thinking, at least for a few more weeks, to give us the opportunity to, to buy on discount.
You think we could buy, say, the Aussie under 70 cents?
I'm crossing my fingers, hoping so. Yeah.
Yeah.
I think we might.
Yeah, I do.
I think we might. I think under circumstances we might even go back towards 67.5 cents.
Yeah, that'd be.
This is what I drew some time ago. I haven't touched it. You see.
Yeah.
One last high, I said after the triangle, and perhaps a correction towards 67.50. I haven't touched it.
Euro dollar below 119 now. So, and equities are turning lower, not a lot lower, but they are turning a little bit lower. Yeah.
Okay.
Dimitris called me today, Stelio, to ask me if you should get rid of his dollars. I told him, are you crazy? Not now. Give it a little bit. I mean, you shouldn't have had dollars, as I told you. I told him. But since now you have them, keep them for a little bit longer. I think.
By the way, I see Charlie. Yeah, I see Charlie, so we can bring him on now.
Okay, good.
Thank you, Steve.
So you have a great weekend, Stephen Stell.
You too, Dale. The rest of you, see you in 40 minutes.
Yeah. So Charlie, welcome back. How are you, Charlie? I'm going to share my screen. Hi, Charlie. Welcome back to Face.
Great. Thanks for having me.
All right. So
can you see me?
let's let's see, I'm gonna be sharing my screen here, so while we're on.
You can now
Don't
share
see
your-
you yet.
Yeah, you can also share your camera if you want. I just unlocked it.
Okay, you got it.
So Charlie?
Yeah.
All right,
What's-
I
what's
don't see
happening,
your camera on, but go ahead,
Well-
just hit the video button there, and that'll put your camera on.
Start
Anyway,
video.
Yeah, start video. Okay, there.
There we
you
are.
All right, buddy,
All right.
you're right underneath me.
All
So
right.
okay, all right. So
Modern
you know-
technology.
we've had a pretty good decline in the markets here this week, Charlie, and what great timing for your writings about why short selling is an important function of the market. And I know you also wrote about Chanos going to Washington, but why don't we
Right.
start off with the attributes and what's important about short selling to maintain market balance, et cetera, and why they make the market more efficient.
Well, I just want to point out that I've never been this sort of huge fan of the short selling. I mean, Jim Chanos is a guy I've known for a long time. Personally, I really like Jim. I consider him a friend. But, I was critical of his Tesla short, not on fundamental reasons, just for other reasons. I just thought it was such a cult following that it wasn't going to zero anytime soon. I was really critical of Bill Ackman's Herbalife short, and you can look it up.
Oh, yeah.
I wrote a lot of stories about it. So I can't tell you how many stories leaked by shorts to me that I just turned away from. Like, I didn't care about, dog shit company XYZ being it just wasn't big enough for me. So I'm kind of in an odd position here, being some guy that's saying, we need more shorts because because I am not that guy that, there are reporters out there, that get 99.9% of their stories from the shorts side. They made a career, and a good career, out of it, just, touting the short thesis on everything.
You mean the one with the first name of Herb?
He's a good friend of mine, and he's an excellent journalist. But yeah, Herb
Why do you think he gravitated towards short selling? I mean, at the beginning of his career, I remember seeing him. He talked about buy side and everything. I'm wondering what really, was the paradigm shift for him to, especially in the greatest bull market in the history of the U.S., turn towards short selling.
I think Herb is an honest guy, and I think he was really worried about the notion that the real problem in the markets, when it really comes down to it, is not the short sellers, it's the touters. The natural inclination is for stocks to go up. That's why so many average people, when you tell them, hey, you can make money betting stocks go down, they're like, oh, why do you want to do that? And how, they can't believe it. So the natural inclination for markets is to tout stuff, and it always has been. That's why we've had so many bubbles over the years. And I think that's what drives Herb's enthusiasm for shorts, and that's essentially where I come out on this as well. It is the markets are Wall Street is one big touting machine. It occurs at the big firm levels, and analysts looking for access to CEOs and for the firms to underwrite deals. I wrote a book about it, years ago, about 20 years ago, as a matter of fact. More than that. God, I'm getting old. When did I write Blood on the Street? 2000 about 20 years ago. 2005.
Yeah,
How many years
on
ago
the
was
buy
that?
side. Yeah, you're
It's a little
talking
early for
about
me.
26 years ago, Charlie. So, a lot of people that short sell, a lot of them were in, like OTC markets, and they had all kinds of targets because of, really, that's real speculative type stocks, and it was easy to pressure them. In fact, the opposite of short selling, what you call investor relations of corporations, the opposite of sound machine for
Right.
people to buy. Go ahead.
Corporate America this whole market is set up to tout stuff. So
Right.
you need that other side. And if you're going to quash that, it's absurd. Now, what was fascinating about the whole GameStop thing to me is that the short sellers didn't do anything wrong. I mean, if you listen to these I mean, I was listening to what's her name, Maxine Waters, the chair of the
Oh.
House Financial Services Committee. She was talking about predatory short selling. The predators weren't the shorts; it was the
Right.
guys on the other end, the guys that were, buying the fractional shares or
Squeezing
whatever of
Squeezing
GameStop
them.
and pushing it up to $500. That was the predator. Those were the predators. So I thought it was a good time to weigh in. And like, listen, here's my view of it: we need more short selling. Now, obviously, there are bad guys on the short end as on that side as there are on the touting. I do not believe that Jim Chanos is one of those bad guys. He does very good research. I don't think Gabe Plotkin, the guy that ran Meldon Capital, was doing anything predatory other than betting that a video game retailer that's in malls is just not going to make it in the future. And it's a good short. It's a good negative. It's a good short. So I think markets need more short selling. I think we're in a dangerous place when public policymakers are like saying you can't criticize a stock, or we're going to put limits on how you criticize a stock. By the way, Dale, how does a short seller can, I guess, in the short term, drive a stock down? You borrow the shares, you sell it. Okay, I get it. But over a long term, it's all about company performance, and it's just. I mean, how did Tesla? By the way, Tesla got better when the shorts exposed it. I mean, it's
That's a
fascinating.
great point. That
Here's
is a good
what's
point.
fascinating. The shorts, and I covered this.
They make companies accountable.
Right. So, but listen to this. This is key. Elon Musk will never admit this, but remember, early on, the short position was that this is a company's numbers don't add up, and it could go into bankruptcy.
People are still saying that, Charlie.
Okay, but listen, who conceded that point recently? Elon Musk said when they were building, I think, the Model 3 out, when they were very close to bankruptcy. He said it. So my point is, the shorts exposed that. He got his act together. He got the production better, and that's why we need short selling.
That's a great point. So the short sellers point out the chinks in the armor of a company,
Absolutely.
and then the company has a chance to address it. And maybe they wouldn't if it didn't go public and people were trying to press the value of their stock down. So Is that the most noble part of short selling? Is liquidity also part of it?
A market is a debate, isn't it?
Yeah. And why are only shorts predatory, Charlie?
Oh, that's the whole thing.
They're not
the most predatory.
Yeah, I mean, was it predatory?
There's a whole research business out there where these OTC companies and some non-OTC companies pay for research. Okay, I get it. Wall Street firms, they pay for research if they go to Wall Street. They pay
for buying, Charlie.
Yeah.
I worked IR for a little while, and you know what? That's their currency. Their stock is their currency,
right?
And they'll pay an IR firm in either free trading or restricted to come in and bring buyers into their stock.
Right, but it's sometimes it's even more pernicious than that. They pay a research outfit to put out research.
Yeah, I've seen those. Yeah,
I mean that's a business model. That's a business model out there. Pay for research. Wall Street pays. How does a company pay Wall Street for publishing positive research? Even though there's much more controls. Trust me, I wrote a book about it, and I broke a lot of stories when I was at the Journal that led to those controls. There's much more controls of that these days. But Wall Street hires these firms as underwriters, right? If a firm, if a buy side firm says good things about a company, sometimes the company benefits them in certain ways. Access, Wall Street is a tout machine. Trust me.
I believe you. Okay, so you think we've addressed this short selling thing? Because I want to switch gears a little bit to the Fed.
Go for it. All
right. So here's a 10-year yield. We had we had a decent NFP number. Okay, so I thought this might be it, but we're still going. Do you think that Powell's making a policy mistake by not jawboning and saying he's not concerned about rates going up right now? I've heard people say that. All
say that again, Dale. Say that one more time.
Okay. Do you think that Powell is making a policy error by not jawboning about rates going up and saying it's fine, it's normal, and it means that the economy is improving?
I think it is. No, I don't. Listen, I think the bigger problem needs. Well, I don't know if the Fed weighs in on this stuff, but it's the fiscal policy that I think is really, really problematic right now. I mean, $1.9 trillion of spending on top of listen, I'm getting my vaccine today. Okay.
Oh, good.
I'm getting it. I have, for once my hereditary high blood pressure it pays off, I guess. So I
Okay.
qualify.
Yeah.
I'm getting my I'm getting stuck with a needle today. By mid-April, I'm gonna be booking at least 2 vacations. Okay, that's it.
The whole country feels that way, Charlie.
Right. So now think about that. Think about the massive stimulus that's going to come via vaccination on top of spending $1.9 trillion of money, on top of 0% interest rates and everything else. I think if Powell says anything constructive, it should be, hold off on the fiscal stimulus right now. We need to.
He went hat in hand for over 6 months.
I know.
That
I think
we
that's
need fiscal to pick up the ball.
That's the problem. Listen, no one would care if you did a fiscal stimulus that said, let's get needles into everybody's arms, and anybody that's part of the restaurant industry, one of these industries that are, that just got decimated, right? You own a restaurant, I mean, you're screwed. Friends of mine own restaurants in New York City that are just crying every day. They're hanging on by their fingertips. Some are going out of business. If you want to give money to those folks, yes, they're literally giving people money that have good jobs and have been saving money. I mean, it's just such a waste of cash. And on top of that, that money has to get back into the system at some point. And that's, I think, what the markets are doing. And I think if he's going to do anything constructive is to say, stop, with the fiscal spending for now, take a breather. It's unnecessary.
So you're kind of into Larry Summers' camp. Isn't that what he said? That
first time I've ever agreed with him.
All right. Well, there you go. That's history.
I mean, listen, Larry
We're
Summers,
making news.
Larry Summers, is a brilliant man. I don't put myself in his category of knowledge of economics and finance. I mean, he's a really smart guy. But I generally don't agree with him on policy stuff. Secular stagflation, I never quite bought, and I think that was turned on its head during the Trump years, to be honest with you. But I agree with them on this. This is playing with fire, and I think the markets are saying that. But let's put this into it. I was just watching, and I hate to say it, I was watching CNBC. You should know, even though I work in Fox Business.
All right, let me ask you. That's a key. Is the volume up or down?
No, it was up. And one of my best friends is the executive producer of Squawk Box. So I was watching it. And he told me that they had Scott Gottlieb on, the infectious disease guy, that the doctor that's on the Pfizer board. I wanted to hear him. But I think it was Joe Kernan or one of them made an interesting. Joe made the point that who's by the way a friend of mine, still friends with Joe, even though we're on the other side of the fence. That in 2000 the 10-year was at 6%. Yeah. Right. Yeah. The last time we had something like this,
these are the lowest rates since the Civil War.
Yeah, I mean,
the first Civil War. All right.
Yes, right. This is nothing to worry about,
Yeah. Okay. So we're looking at what's happening with the markets, and you're talking about overheating. So does the letter K that people are using to represent the uneven recovery transform into a V?
I think so.
Are we going to finally, the people that are, were struggling before the pandemic, and the pandemic magnified it? Are they going to be able to participate? We had good numbers today, so they're rehiring.
Yeah, I mean, listen, this pandemic has been devastating for certain pockets of the economy, and we know what that is. Those pockets. Everybody else is done, at least economically. I mean, obviously, if you caught COVID, it's trust me. My brother got COVID. My brother's a doctor. He runs the ICU at Brooklyn Hospital. He got COVID early on. No fun. But if you got it, that's not good. But if you didn't, and you worked from home, you were able to, and you were employed, you were able to save a lot of money and do pretty well. But certain people, got destroyed and crushed. Those people. Oh, sorry about that. Life should be getting better for those people, just logically, right? As I go out and spend at restaurants, when I go out to eat more, I used to go out to dinner in Manhattan three times a week, at least. I go out maybe once every other week now, and but as people start returning, those jobs, that sector of the economy is going to pick up at some point. I mean, it has to. Especially if people feel more comfortable eating inside, and we don't get another second wave, and people get vaccinated. I mean, this is we've had multiple second waves, I should say, another wave.
Yeah.
This has a potential to pick up dramatically. And then,
all right. Well,
then
you
inflation
talk
is
about
clearly it. Stuff
yeah.
we worry
So,
about.
all right. So then let's talk about another wave. Texas reopening completely, 100%. No minimums on capacity in bars, restaurants, anything. What do you think?
Connecticut, where I am right now, is reopening as well. Not as much as Texas, but they are reopening significantly. No bars, but restaurants 100%. You should look up what Lamont has done. We should point out that some of these states like Texas and Florida, I know people that are there that are saying it's, life's pretty normal to begin with. They did not lock down that harshly. It's not like they're doing a 180. They've been moving in this direction, particularly Florida. A lot of my friends are down there saying, get your rear end down here now, because, sometimes you have to wear a mask, sometimes, but it's about as normal as you get. And so, I don't think Texas is the 180 that people think. And even at its height of when they had a spike this summer, the restaurant, the hospitals were crowded, but it wasn't it wasn't like dire. People were dying in the streets. So I think they understand how to handle things.
Charlie, everyone knows your political side that you're on, and you're a conservative guy, and yet
although I was called today a liberal, someone called
a liberal
me a
conservative.
Some Looney Tune on Twitter called me a rhino. I don't know.
Maybe were you publicizing that you're getting the vaccine? So
I think so. Yeah. It's interesting that some of these diehard Trump supporters are more outraged that I'm getting a vaccine than they were when Trump said you could shoot bleach. I mean, it's just so nuts.
And you know what? It has come out that both former President Trump and Melania had COVID shots. Don't you think it would have been kind of a normal thing to let your followers know that you're doing this and that it's okay to do it, and encourage them to do it, instead of it having to be found out and brought to the public's attention by the press instead of him?
Yeah, I'm not quite sure why he did that. I mean, it's Donald. I've known Donald for years. I actually like him. He's such a strange guy. You know what I'm saying? It's just he's perplexing, and I mean, he did so many good things with the economy. He did some stupid things, I believe, with trade. He did a great thing with Operation Warp Speed. He lost the election. He could have just said, I'm going to spend my final days making sure the vaccines get out there and helping the two Republicans in Georgia win that race. And I guarantee he would have been renominated in 2024. And now it's just he still has a loyal fan base, but there's a level of toxicity to him right now that is just so bizarre, and I can't get my hands around like why he does what he does. But
okay, I mean, I think I think that you're probably not alone. Even his own family, I think at times probably. So, what do you think the Capitol will ever return to normal, or are we going to have it be a green zone forever? I mean, even Congress took a day off based upon QAnon conspiracy theory. It's hard for me to believe that just these kinds of reports are going to stop the government from functioning.
I don't think the government's going to stop functioning. Listen, I'm actually more worried about stuff like Portland, where literally Looney Tunes control the streets every day, and
it's still bad up there at night.
Bad. Yeah, Minneapolis, you name it. New York City is horrible. I don't know if you saw what I posted on Twitter last week. I was in the city. I was there for a couple of days working out of the Fox headquarters there. And then I went out to dinner that night at my friend's restaurant right off Fifth Avenue, in one of the most expensive parts of the city. It was a ghost town. It was horrible. It was homeless guys. A guy in broad daylight on 6th Avenue and 47th Street pulled down his pants and defecated in front of me. I'm telling you, this city, New York City, is so bad. And I'm more worried about what's going on in places like this than the Capitol right now.
Okay.
The Capitol, listen, it is what it is. I'm far from a QAnon supporter. Trust me on this.
Okay.
But man, I mean, what's going on in big cities right now with crime and homelessness is really scary.
Yeah. So, it's ironic that we're finally going to have some relief despite variants with COVID, and
Right.
hopefully, things are going to turn around. It's hard for me.
Some
to
guy
see-
named Len, by the way, some guy named Len said, "You don't sound far from a QAnon supporter." Jeez.
Okay. All
Yeah,
right. Well,
maybe-
that's my fault for going there. But
Len should Len should take the needle out of his arm. It's a little
Yes.
early for that.
yeah. So anyway, Charlie, it's my bad for going to political.
No, that's no problem.
What are your sources saying about this recent sell-off in the stock market? Could garden variety? I actually think that the S&Ps could make a case for maybe another 15% lower from here over the course of time. Take us back down to about 3,000 in the S&P. It's kind of a Nostra Pinkert call. But what are your sources saying about what's happening, especially the leadership in NASDAQ, which led on the way up is leading on the way down? Do they think that we have a change of regime, and the narrative about reflation? Gold's been getting hit. The only commodity that's hanging in there strong is oil. So what do your sources think about what's happening?
Why help me out here for a dumb reporter like me? Why is gold selling off when you're worried about inflation?
Yields.
Okay.
So it's all about yields and opportunity costs. So when yields were low, there was no opportunity costs in
I got
gold.
you. So
All right, but they're still nominally, yields are still, under inflation, right? If we're running
Right.
at 2. So there's not as much opportunity costs. But what are they saying to you, Charlie?
I mean, listen, a lot of smart people have been wrong about markets over the years. Floyd
Yeah.
Norris was a famous columnist for the New York Times, and I remember for 10 years before the NASDAQ blew up, he was calling for the NASDAQ to blow up, and every year, or about 5 years, but it never came. Then finally it came. So remember, just where smart. Sometimes markets. Jim Chanos is a really smart guy. He had all the data on Tesla, but he missed it. There's all these extraneous factors. I mean, one thing I do hear more is people are worried about inflation more and how that will impact markets. I mean, that is something that if you talk to anybody on Wall Street, they're looking at that.
Supply chain issues being part of it. How do you explain shortages of semiconductors?
Yeah, I mean, it's just a lot. I mean, there's then there's will inflation, will the average basket of goods, once people start spending money, the real inflation, not just financial inflation, will that ever crop in? And if that does happen, that's when Powell has to raise rates, right?
Well, a guy who used to go out to the restaurant 3 times a week probably hasn't noticed what's happening at the grocery store. It's already there, Charlie.
Yeah, well, I go to the grocery store a lot right now. It's still pretty inexpensive, it's still reasonable, but if the average person gets hit with this, man, then he's got to raise rates, doesn't he? And who knows what happens then?
How about rents? I mean, people are paying exorbitant rents everywhere, all over the country.
Not New York. They're coming down. One of the good things, and I put good in quotes here about what's going on in New York, is that rents are going down.
Oh yeah, so you could get a studio with a closet for about $4,000 now in New York?
$3.5. They're going down. I mean, there's a theory that all those abandoned shops on Fifth Avenue will be converted to high-end apartments. I you know, I believe it when I see it because, you know, but there, you know, there's a support there. There is a theory that in these cities, as everybody sort of spread out and socially
Yeah.
distanced,
Yeah.
that in the cities, because of this glut of office space, that rents will come down because it will, because people will
Convert
it'll
'em
be, yeah. I mean, it's
to
so
condos.
there's it'll be. I don't know if that's true or not, but by the way, you have to have people willing to live in New York City, and you're not going to if homeless guys are chasing you around the block, they're not going to want to live there. Yeah.
All right. Well, you know, Charlie, I hope you have no reaction to your first shot.
Thank you,
Are you
Dale.
getting a J&J or are you getting the Moderna? You know,
No, it's
no
either
idea?
it's the you get what they give you. I don't
Yeah.
think the J&J is ready yet. I think this is
Okay.
Moderna.
All right. I didn't have a reaction. I get my second next week, and
Good
you
luck.
know, stay healthy, my friend, and thanks for extolling the virtues of short sellers. Not many people do that, and you know, I hope Jim Chano sees the interview and knows that there are guys out there in the broadcasting and print media area that see what they do is not predatory.
Yeah,
Okay?
I will send him the link. How's that?
Okay. All right. Well, everyone, thank Charlie for being with us today. Have a great weekend. Charlie
Thanks, guys.
Gasparino. Follow him on Fox Business and New York Post. Great articles. Or follow me on Twitter. Charlie drops his work off to me. I tweet it out there. So thanks again, Charlie.
Anytime, Dale.
Appreciate you
Talk to you
coming
soon.
in, buddy. All
We'll
right.
do it
So
again. Bye-bye.
that's a wrap, everyone. Hope you had a good NFP day, and we'll see everyone on Monday. Remember, don't just count your pips, count your blessings. And again, as I said, we'll see everyone on Monday. Adios. Thanks again, Charlie.
All right.